What new wishes do you have in the new year? Good health? Have you thought about contributing to the health of the environment that we are living in? We can raise our awareness towards environmental, social, and governance (ESG) in our daily lives. This will help the world achieve the goal of sustainable development. In 2022, the global economy is expected to continue its recovery, with the growth rate slowing slightly to between 4% to 5%. It indicates that the economy may already be in a declining regime. The subsequent step of an economic declining regime does not necessarily have to be a contraction, nor should we expect asset prices to fall. On the contrary, investment returns from equities, bonds, and alternatives may be positive during this cycle. ESG appears more frequently in our daily lives. It may also impact your investment decisions, especially in the post-pandemic world. More and more investors are paying attention to the investment theme of ESG. We are no different and have been advocating sustainable development. The inclusion of ESG factors in the investment process may help enhance investment returns and reduce risks. High inflation in the US may still remain as a major source of risk this year. With consumer demand remaining strong and supply chain issues persisting, inflationary pressures in the US may continue to rise in the short term and may not begin to ease until after the first quarter of 2022. It may return to levels close to but higher than 2% before the end of 2023. The entire normalization process may take up to 2 years. The US Central Bank may speed up its tightening process to curb the persistently high inflation. The Fed had been buying over $120 billion of bonds per month to support liquidity in the economy. Recently, they have decided to begin to slow down the purchase, and shortly after, the Fed has decided to double the scale of its tapering to $30 billion a month. The entire program may end in mid-March. US may then enter the interest rate hike cycle shortly after the end of the bond buying program. The ESG landscape is still evolving. It is necessary to adopt a flexible strategy in handling ESG issues and keep pace with the times. Despite the potential of US sovereign bond yields rising along with the anticipated interest rate hikes, real interest rates should stay in negative territory and continue to support the performance of risky assets, including equities. In the past year, capital has been continuously flowing into the stock market even as volatility has increased. In 2022, global corporate earnings growth is expected to normalize, and global financial conditions may continue to tighten. Coupled with a number of uncertainty factors, including the pandemic and inflation, overall return of equities may lag behind last year, but still likely to outperform bonds. For the first quarter, we are optimistic about the developed markets, in particular the US and Europe, neutral in Japan, Asia, and China, and slightly bearish on Hong Kong and other emerging markets. We remain neutral in bonds overall. We're slightly bearish on sovereigns. The total return of investment-grade bonds may also be affected by rising rates and is therefore downgraded to neutral. Whether for the benefit of yourself or the next generation, it is time to get to know more about ESG both from investments and daily life perspective.